Hey everyone, I'm Hazel and this is A Citizen's View, the regular folks guide to the Pulaski County audit. We're going to talk about what's in the audit, and then at the end we're going to talk about what we can do about it, what we can do to use this audit to make Pulaski County's local government even stronger. So let's go ahead and jump into it. So just to get it out of the way and so you know who's talking to you right now, who am I and why do I care about this? So I'm Hazel. I am no one important. I just live in Pulaski County and care about Pulaski County. I work for no one but myself, and that doesn't mean that I have a small business, friends. That means I'm only doing this because it is important to me. I'm only doing this because I know that this information needs to be out there as clearly and factually and accurately as possible. I know you've heard maybe some things about how I'm sent from a certain group or from this group of people. Not sent. I am a grown woman. You can talk to anyone who knows me and they'll tell you the chances of me being sent by anyone about anything are real low. I tend to do what I want when I want. Also, I want you to never take my word for anything at all. At the bottom of every slide, you're going to see a link that's going to take you to that original information. I want you to fact check me over and over. I want you to read the original document and decide for yourself. I'm not making this so you'll believe what I say. This is purely to share information. So let's go ahead and talk about why audits happen. The reason audits happen is really simple. They're a routine process. It's done at the end of every fiscal year, the fiscal year ending on June 30th, so the new one starting on July 1st. Audits show our Board of Supervisors and our county administration what is going well, what needs to be worked on. The information in the audit is only helpful if our leaders follow through on fixing the issues. And that's what we're here today to talk about, is what the issues are and how we can convince those people who are sitting in the seats on the Board of Supervisors to fix those issues. So from the outset, the audit was plagued by major delays, and several of them. Theoretically, the fiscal year ends on June 30th, and all of the audit information, all the things you have to gather, needs to be where it's going by December 15th. So that's several months to get things together for the audit, which no doubt is complicated and a drawn-out process. There are a lot of moving pieces. However, even with the deadline being all the way to December 15th to have this information in, it was delayed and delayed and delayed. And you're going to see later in the audit where the auditors mention that it was the end of March before the information got where it was supposed to go. And even then there was missing information. In the actual audit report on page 16, it says this financial report is designed to provide our citizens, taxpayers, customers, investors, and creditors with a general overview of the county's finances and to demonstrate the county's accountability for the resources it receives and their uses. And that to me is really interesting because that's what we're asking for here, right? That's what we've been talking about, is accountability and transparency. So, since that's the purpose of the audit report, none of us should feel bad for using that audit report to ask for that accountability. Even if there are people that try to make you feel bad for it, or try to distract you or confuse you, this is important stuff, and the purpose of it is to keep track of what's going on so that we can keep our local government accountable. So on these snips from the audit, you're going to see along the side for some of them, criteria, condition, effect, cause, recommendation, management's response. Let's go through all of that really quickly on this slide in a little more detail so that on the other ones you can kind of do a little bit of that on your own, so I'm not talking you to death. So criteria is just what the auditors want to see when they show up, right? So, and what they're judging our information by. So the auditee should have sufficient controls in place to produce financial statements in accordance with the applicable standards. So basically, we should have our poop in a group. Condition. So that's the condition they found our information in. And that condition is that the financial statements as presented for audit, so as they were given it to the auditors, did not contain the necessary adjustments. It didn't comply with generally accepted accounting principles. So because of that, it was a mess. The effect is that there's reasonable possibility that a material misstatement of financial statements, so not even somebody doing something funky, just human error, would not be prevented or detected and corrected. So they can't keep mistakes from happening with the system that they have. And they're also not going to find mistakes and correct them with the system that they have. It gives the cause for, the condition they found it in. And it is that the county doesn't have proper controls in place. So the auditors give their recommendations, which in this case is pretty much get some controls. And then management's response is the county management, what they have to say about it. And it says that they're going to review the audit process and fix things prior to the final audit fieldwork for next year. Now let's remember, when was this audit completed? The fiscal year ended last year on June 30th. They had till December 15th to get that information in, and that's December 15th of last year, and they did not. It took so long for all of this. Already we are past this next year's audit time. Like, we're already to the point where they're collecting things to give to the auditors this coming December. Have they already come up with the process? Have they fixed the issues? If so, how can we see them? I want to see, and I think you probably do too, what that plan is. So here we are again with that same format, and the criteria is that general and subsidiary ledgers should reconcile to one another. Just meaning the books over here in this office and the books over there in that office, they should agree. They should get along. The input should be the same. The condition that our stuff was found in was that the treasurer's office and the county office have separate accounting systems. It's not the same, which means there's an extra step, there's extra work in making sure that the books in the treasurer's office and in the county office are following along with each other. The effect is that the county has been unable to close months in the system in a timely manner. So our stuff, because there's so many extra steps and we don't have a process that works for it, it's taken forever to get done. Interim reporting was inaccurate, which is always a concern. Accuracy is very important when you're counting our tax dollars. And the annual close process was delayed significantly. So the cause of all of this, of the condition our things were found in, is a lack of monthly reconciliations and routine batch upload process. So again, it's a lack of process. This is something that can be sat down, puzzled out, put together, and that will take this problem away. But that work has to be done. So here's the recommendation, and the recommendation is do better job. Management's response is that they concur, they agree with the recommendation, and they're working to address the issues noted. Cool. I would like to know what that work looks like. So you're going to see along the side of this one that we've got a few more categories of information here, which I think is just because this is, COVID relief funds. So it's an actual program. There's a little more information that's needed. The criteria is just that, the shit's together. The condition is that it was not. So the quarterly information did not agree to the underlying schedule/information provided for the audit. The total amount of funds received was utilized by June 30th. The amounts initially included did not agree to the schedules ultimately determined to be applicable for the program. So we didn't get the stuff spent by the deadline. Context right here. So updates were made to utilize funding predominantly for public safety salaries rather than the various expenditures that were tracked and reported to the Commonwealth of Virginia throughout the year. Reports were not updated to reflect this change. So instead of using coronavirus relief funds for the other things that they had said they used them for public safety salaries, and then didn't change the information to show that that's what happened. Schedules related to broadband, which is something we've been having a lot of conversations about, were not appropriately updated and maintained to reflect all related expenditures. The cause, why did these things happen? Again, lack of appropriate reconciliation and review process over quarterly reporting. The effect is that the amounts reported to the Commonwealth of Virginia do not appropriately reflect program-related expenditures. They're not given real and accurate and true information. So, of course, the recommendation is, hey, fix that. And the management's response is, yeah, we'll fix that. So, how did they fix it? We don't know, because the county hasn't talked to us specifically about this audit and what's in it, only that we shouldn't talk about the audit. So as you look at these two, this one and this one, you're going to say, wait a minute, we just talked about these. Well, the reason we just talked about them and the reason they're in here again is if you look at this date right here, this one says 2020-001 instead of 2021-001. And that's because these two issues are both existent now and existed in the prior audit and have not been corrected. Which is why when people who are in positions of power seem unwilling or uninterested in talking about the actual audit instead of just talking about the people who are talking about the audit, they're deflecting, because this is failure, right? They said, here's the problem. The auditors said, this is an issue. The county said, we will fix it. The next year, in addition to a myriad of other issues, these two same things are back again, and they're not small things. We're not meeting some pretty basic minimum standards, and we need to know why, and it needs to be fixed. Before we get started on the content of this slide, I want to point out at the bottom, the link is different, and that's because the only place I have seen this, even though it's from the same audit and from the same auditing firm, the only place I've seen this letter, this specific report, has been on the school system's website. And that's kind of part of the beginning of the conspiracy theory that I and others who are asking these questions were sent by the school system. It's just that this report specifically mentioned the school system and the school system posted it. And because I've got kids in school, I saw it on social media. That's the extent of it. Other people who have kids in the school system who are my friends, they were sending it to me going, what in the world is this about? So, I can't know the school system's intent for posting it, but it seemed pretty on the level. And the reason I don't know their intent is because I didn't have anything to do with it. So that's where the conspiracy theory comes from. I've just been a supporter of public schools, and I read an article on the public schools Facebook page or website or whatever. So if you can find this letter on the county website, I would love to see it. Shoot me that link. Let's go ahead and get into the substance of this slide. So if you look at the little blurb at the top, it says that the business continuity plan is missing our locality's plan for the loss of workforce. I can see where that's an issue. I'm not going to pretend to understand what that plan is about. And I am one person with limited time. So I have not looked deeply into the Department of Social Services or what we're going to see coming up from the school system. Just because one thing at a time. If any of you guys out there are particularly interested in the social services portion of this and you want to, call and ask some questions, I'm sure they'd be happy to talk to you and figure out what's going on. And you can see at the bottom, there's a lot of information here. And it's about spending money on behalf of children when there's no guardian appointed. And it looks like some general funds were put into the special welfare fund. So that looks like that was not the right place to put that. And that's something between the Board of Supervisors and Social Services has to be figured out. And then at the bottom, you see that the cash balance of the special welfare fund, the totals don't match up. So that is something, that's a process that needs to be fixed in a big way, so that the monies for those kids are protected. I'm sure there's a plan. And again, if anyone has any information on that plan that they want to share, that'd be great. Holler at me. All right, so you're going to see on this slide that this information is highlighted. I need you to know it's not a conspiracy, friends. This section is highlighted because it's highlighted in the article that was posted, because it, again, was posted by the school system so that they could be transparent about the results of their audit. I didn't highlight this. There is no conspiracy. I have 3 kids in school. I was scrolling. I saw the audit. It was highlighted because it was posted from the school system. And this says that someone screwed up a conflict of interest form. Looks like a pretty thorough misunderstanding of the form, missed a date, that kind of thing. And the school didn't have a process in place to kind of review those and make sure they were done correctly. So that very clearly is an issue that needs to be fixed. But overall, not into the world stuff. The audit was clean otherwise. So, I mean, to both social services and the public schools, good job for some pretty good audits. Tighten up the process, and hopefully we won't have these same things pop up next year. So now we're at the part of that audit report that is about the county office. And you can see that there's some struggle, and we're going to talk a little bit about this in a few more slides, but there's some struggle in keeping things straight between the county and the Economic Development Authority, right? So large outstanding balances between the two. So the auditors say, you know, that needs to be repaid or forgiven, but we got to do something about that, because some of those accounts have been, or some of those large outstanding balances have been constant for several years, meaning these things should have been cleared up a while ago and they haven't been. So after that is outstanding items for bank reconciliation. So again, outstanding items provided to audit did not agree to the treasurer's accountability report by 55 grand. Payroll entry that was voided in payroll but didn't post that way to the ledger for 116 grand. Revenue that was posted twice, the same revenue posted twice for about 60 grand. And it looks like that was most of the issue. So it doesn't say all, most of the issue. They have got to be reconciling these things monthly, and they are not. They're also listing things in batches instead of individual checks. Instead of this check for this amount went to this place on this day, and kind of being specific by check, it looks like they're finding ways to group them together, resulting in a difference of about 16, 17 grand. That's a problem. So this slide starts off talking about Federal Form 941. And according to IRS.gov, Federal Form 941 is employers' quarterly federal tax return. So employers use Form 941 to report income taxes, Social Security tax, Medicare tax that is withheld from the employee's paycheck. So they're reporting of the money they take from us for those purposes. And then also to pay the employer's portion of Social Security or Medicare tax. So this is something that documents our tax money being, you know, withheld by employers. So that's kind of a big deal. And again, there's reconciliation to payroll registers. However, there is not reconciliation to ledger trial balances. So we're missing a step. It says that a step should be added so that all of these things are in line with each other. The next is purchase orders and invoice approval. We noted 3 out of 40 invoices selected for testing had purchase orders dated after the purchase was made. So these purchases were made without official approval, without official request. That follows the process that's set forth by the county. So this isn't even an issue of we don't have a process, it's the process is there and it's not being used appropriately. It also looks like approval for payment was not noted on some of the invoices, and that there was no purchase order for some items. So they were bought and not even a purchase order done afterward. It was just never done. No purchase order, no approval. So that's a system that's in place that isn't being followed. Written policies for federal programs. So yeah, again, looks like we're missing some policies, which might be related to the social services, because I know they were missing that written piece of the business plan. So, you know, things happen, but we got to get those written and put in place. Timeliness of information. Now, we talked in the beginning about the delay in the audit, but I want to really highlight, and I think this is something we're going to talk about in just a minute too, but during the audit, it says several items were requested multiple times before they were provided. So these things need to be ready and in place so that the auditors aren't having to come back and continue to ask for the same things over and over again. The same things are needed for the audit every year. These things aren't a surprise. So if this is happening every year, we shouldn't be having this much of a struggle. Next, we have Munis. So Munis is the program that the county uses in the county office to keep track of funds. This is not the same software that's used in the treasurer's office. It is the same program that the school system uses. So the school system and the county offices both use Munis. And here it says the budgeted amounts in Munis for the school capital project fund did not appropriately reflect the appropriated amounts. So it said one thing and the reality was another. Going forward, if there's a carryover system error, a budget adjustment should be posted. So again, that's just a process issue. So on the last little one on this slide here, capital asset classification, and it says, you know, that during the review, they noted several assets were input in the fixed asset software under the wrong classification, i.e. equipment was input as buildings. So my concern there, other than, you know, that seems like a weird thing to mess up. So what does that process look like? Like, do we need to fix that process so it's a little harder to mess that up? Equipment is a depreciating asset. Equipment loses value over time, whereas buildings, dependent upon circumstances, can gain value over time. So listing something that loses value as being something that gains value or could potentially gain value doesn't feel great to me. But again, we got to get those processes tightened up there. And at the end it says, additionally, the listing should be reviewed in detail to ensure that reporting is accurate prior to moving assets to the Munis software. So there should be a check as you're moving things into the software. As you're inputting things into the computer, you should at the same time be checking to make sure those things you're inputting are accurate, which seems reasonable to me, honestly. I know that this has been a little bit of a hot topic with people I've talked about. The very first one here, construction in progress balances. So keeping at least an annual review of where projects are at. So it says activity for the years is reviewed in detail, but there does not appear to be a review of balances by project to ensure that balances are appropriately reported. We recommend that projects be reviewed at a minimum of annually to ensure that they're still moving forward and amounts are either capitalized or expended appropriately. So this gives me the impression that we are not even reviewing these balances once a year. It says at a minimum annually. So not even once a year, some of these are being reviewed. That's a problem. The next thing on the list is Auditor of Public Accounts reporting deadlines, the APA reporting deadline. And this is, again, something we've touched on, and I think we'll probably touch on it a time or two more before this is all over. But audited financial statements are required to be filed with the Auditor of Public Accounts of the Commonwealth of Virginia by December 15th of each year, and we already know we well missed that deadline. it says that trial balances weren't even provided until March 29th of 2022. That's an issue. You had from June to December, or I guess from the 1st of July, all the way through the middle of December to get these things ready, and still it took until the end of March. So next on the list is board meeting minutes, and this is something that I have a particular irritation about. I won't lie about that. And it says board meeting minutes are not posted online for all meetings. Several meetings were requested, but were not provided for audit. This has been a complaint in the county for years. The lack of transparency. That's why so many of us are fired up right now. Is meeting minutes, we know that the minutes are taken and approved. I don't have any reason to doubt the professionalism and capacity of the person taking the minutes. They seem like they do a great job. This falls to the board, not their employees. Why aren't these meeting minutes posted? This has been an ongoing problem for years and years and years. And we're at the point now where we know the minutes were taken and they still couldn't be provided to the auditor. Why is there so much county information hidden from us? For those of you that were at the most recent board meeting, you saw a county employee read a letter to us, not even about the things we were asking about, but read a letter to us from the auditor assuring us there was no embezzlement or fraud. Okay, cool. That's not the issue here, but fine. And then at the end of reading that letter, that county employee then said that if we wanted a copy of that letter, we were welcome to FOIA it, which is Freedom of Information Act. That means you have to go fill out a request for that paper. You have to pay for the time and the printing, and then you can have the paper. And that can take weeks, depending upon the willingness of the people who are filling that request for you to actually comply. There are lots of people you can talk to in this county about what it's like to get a FOIA request, and to have to FOIA a letter that was read out loud to us in a board meeting, it's bananas. And in that instance that the county employee pulled that mess, one of our board members, Annie McCready, stopped them and said, hey, why don't we just make copies right now in this meeting and hand them out? And that's what was done, and I appreciate seeing that leadership. I think a lot of us did. But I'm very interested to know what's in the meeting minutes that aren't being posted. Why aren't they being posted? There has to be a reason. For this slide, you're going to notice at the bottom that, again, that link has changed. We are in a different audit report, still for the same year, still for Pulaski County, but this is specific to the Economic Development Authority. And this is where we're going to see kind of some concerning stuff that, again, a lot of us have had some conversations about. So along the side, criteria, condition, effect, cause, recommendation, and response, right? So the criteria, what they want to see is the general ledger should include all activity of the authority during the year. Seems reasonable. The condition they found our things in, financial statements presented for audit did not contain any activity related to the transfer of operations from the New River Valley Development Corporation. So they had some activity completely missing from the books. The effect was that the financial statements as presented for audit were materially misstated. The cause, why were these things materially misstated? Why was there no information for the New River Valley Development Corporation? It says that the cause is bank accounts transferred from the New River Valley Development Corporation have not been included in the ledger by the authority. So the EDA, the Economic Development Authority, has not included the NRV Development Corporation in the ledger. Therefore, any related activity was not reported. None. Additionally, the transfer of tenant deposits, fixed assets, and long-term liabilities have not been recorded. The recommendation is obviously, hey, fix that. And management's response is that the authority will review the audit's adjustments and incorporate the transfer of operations into the ledger. So, hey, fix that. Okay, we'll fix that. Well, I'm interested to see how that gets fixed. All right, folks, we're coming to the end. Thank you so much for hanging in there. I appreciate you caring about this. I think we should all care about this. So again, criteria, condition, effect, cause, recommendation, response, right? So the criteria, what they want to see is bank reconciliations prepared in a timely manner, reviewed by someone outside of that accounts payable area, right? They want some checks and balances. Is this money being handled appropriately? And someone not in charge of the money should be looking at that to make sure that they're telling the truth. The condition, so the way that they found it, was that activity for the bank account was not reported in the ledger, and there was no evident review of the bank statements or balances throughout the year. So someone's in charge of that money and nobody's paying attention to what happens with it. Nobody's recording that in the ledger. That's an issue. The effect. This one also personally really bothers me. The effect of the condition is that the accounts were overdrawn several times throughout the year, and there was no internal controls or segregation of duties over the related accounts. So it was overdrawn and no one was looking. Cause of the condition, New River Valley Development Corporation bank accounts were under the control of one individual, just one individual, and were not incorporated into the ledger to ensure segregation of duties and to enable the authority to prepare monthly bank reconciliations. So there was no oversight over this. That's an issue. And that doesn't mean anyone has done anything wrong with the money, but they are doing something wrong by not keeping track of what is happening. So of course the recommendation is, hey, fix that. And the response is, oh yeah, we'll fix that. And now we have to wait and see, are they going to fix it? Are they going to tell us how they're going to fix it? All right, so we've talked about what's in the audit. We've talked about the different pieces of the audit. Now, what in the world do we do with that information, right? So the first thing you're going to do is you're going to go review all of that information. You are not going to take my word for it. I am not an accountant. I am not someone with a fancy degree. I want you to go, I want you to look for yourself. I want you to make up your own mind. Once you've done that, any information you find credible, anything that I have said here, anything you find in the audit that you go, holy guacamole, this is an issue. You're going to tell everybody about it. You're going to tell your friends, your neighbors, your auntie, your grandma. You're going to tell everybody, because we need this information out there because there's a lack of transparency. So we've got to be the ones to get accurate information to our friends, neighbors, coworkers, families. Once you've done that, you're going to ask them, and you yourself are going to contact the county. You're going to talk to Laura Walters, Dirk Compton, Adam Hall, Jeffrey Reeves, or Andy McCready. Now, this little question mark here with Andy McCready, this is not to be disrespectful. It's that they don't have his information on the website yet, which I don't think is on purpose. He's only recently been appointed. Only Laura Walters and Dirk Compton at this point, as far as board members go, have actually been elected. The other three have been appointed, which doesn't mean they're not capable of governing. It's just something to know that 3 supervisors left their seats for various reasons, and these 3 were appointed to fill those seats. So you're going to talk to these people right here on this screen, and you're going to tell them that you want to see accountability, that they can tell us all day long that this doesn't show mismanagement. But that doesn't change the fact that we want to see for ourselves. We want meeting minutes posted in a timely manner so we can look at them. As citizens, it's our right to view those meeting minutes. We want these meetings streamed because no matter how many times people say, well, anyone's free to go to the meeting, they can just go there. Why does it need to be streamed? Some people are working 12-hour shifts and maybe don't want to go sit for a 2-hour meeting. Some people are working 2 jobs. And taking that time off to go to the meeting means some of their bills don't get paid. Some people don't have transportation. Some people don't have childcare. Some people don't have elder care. There are a lot of reasons that people could not make it to a board meeting, no matter how hard they tried. It is completely reasonable in the year of our Lord 2022 for these people to stream their board meeting. Pulaski Town Council does it. Pulaski Public Schools streams their board meeting. Why can't the Board of Supervisors do it? The answer is they can, and they've chosen not to, even though many of us have been asking for years for this level of transparency. They're perfectly capable of streaming, and they've chosen not to. So when you take the fact that they don't want to stream, they don't want to post minutes, and they don't want us to talk about the audit, or they're going to attack us in the newspaper and they're going to tell everyone that we're just making things up. Why? Why are they not willing to be transparent? Why will they not stand up and take accountability for the things going on? And that's an answer to, I mean, I don't have the answer to that question, but I'm hoping if we all stand up and we work on this together, we can get that answer together. So if y'all have any questions, please holler at me. I don't have all the answers, but I can help you find answers, because that's what this is about, right? This is about all of us working together to find the answers to our problems. So I look forward to talking with y'all. If you have any questions, if I got something wrong, let me know. Just holler at me, and I'd love to talk to you about it. Y'all take care, and let's do this thing.